There is a large market for sustainable investments today. The most optimistic estimates are 20% of assets globally, 50% even in Switzerland. This depends, of course, a lot on how you define it. But the fact is, there is strong demand for this that has survived both the pandemic and this year's market turmoil. So I believe this is something fundamental that is here to stay. For instance, some say, well, I don't want any exposure to an industry I don't like. Let's say this is the fossil fuel industry. And that's one motivation. Another motivation would be, I want to limit the downside risks that come from climate change in the future. And the third motivation would be, well, I want to use my investments to transform the economy and make it more sustainable from an impact perspective. So I think we need to make sure that sustainable investment products are clear what the objective is and then live up to that promise. I've published a paper about why ESG ratings disagree. And there are fundamentally two reasons. One is that there's disagreement about what are the priorities. So is maybe climate change or is it more labor rights the most important issue? And that's a natural thing to disagree, right? You and me, we can disagree and both be right. The other reason is the underlying data. Because there's no harmonized standard how to disclose ESG data. ESG ratings use different sources of data, and there are inconsistencies there. And that's a more fundamental problem that we need to solve going forward. A lot is moving in the direction of scrutiny and transparency, and on balance this is good. But a lot more work is needed as well. Something that I would wish to exist is some sort of open source ESG rating, where really there's an underlying basis of data that companies disclose according to a standard. That's also something that's being worked on. And then the competition is more about how to aggregate and interpret that data, but at least everybody relies on the same data. I think that's one goal we have for the future. I believe if you really want to have a lot of impact, it's a good idea to allocate capital to promising startups that haven't found capital yet. But this is also a very risky investment. So for many people, actually going more into public markets and being a vocal shareholder through the fund or institution that you invest with is a safer option that also makes a contribution for which we actually have scientific evidence. Not every problem lends itself to being solved with sustainable investing. So something where sustainable investing is really good at is to spread out good business practices internationally, right? Because this is not tied to national legislation, and sort of pushing companies to do certain things that are pretty easy to do the right way, to actually do that I think is a great strength of the sort of the broader sustainable investing space. Forcing a low carbon transition through sustainable investing is going to be very difficult because it requires large corporate investments. And as an investor, you can encourage that, but you cannot make it happen. There also needs to be a regulatory framework to make economic activities that aren't profitable today profitable in the near future, so that the respective energy systems and so forth can actually flourish. That's something where investors and regulators really need to come together.